What is going on, guys? What is going on? Can you hear me? Let me know if you can hear me. Let me know if you can hear me. William, Julio, Matthew, what's going on, guys? Lyle, Darius, Alec, loud and clear. That's what we like to hear. Vitaly, what's going on? How is SoFi looking? It's too early for that, bro. CPI comes out in 5 minutes. CPI comes out in 5 minutes, guys. 5 minutes. We got CPI. Penny, what's going on? Alec, Roger, Nasser, Dario. Cheers from Edinburgh. Wow, that's awesome. I've been there, actually. Matthew. JCB.
Welcome back. According to a new report published just a short time ago, former President Trump asked Elon Musk last summer if Musk wanted to buy Trump's social media platform, Truth Social. This is being reported by the Washington Post, which adds that Trump and Musk have had other conversations aside from the one about Truth Social. Now, under Musk, X...
All right. Noor says, Ramadan Kareem. Ramadan Kareem to you too, man. Essa, Damien, Byron, Tay, what's your prediction for what? What is my prediction for what? Couldn't be a more general question. Three minutes till CPI, guys. Hi from Jordan. I've been to Jordan too. M. Mustafa says Ramadan Mubarak. Ramadan Mubarak to you too. Duarte Machado. Buenos dias. Tay, Christian, Santos. Greetings from San Pedro. What's going on, man? You ever been to the San Pedro fish market, Santos? I used to go there. We hitting that 3.1 consensus. So for those of you that don't know, here are the expectations for CPI coming out in 3 minutes. We got 0.3% core month over month, 0.4% headline year over year. Month over month, and then 3.1% year over year. Remember that CPI last time came in inflated, came in well above. Let me see if I can find it. Came in well above expectations. Let me see. So here are the last few CPIs I'm going to show you. But if you look here, you'll see that CPI was expected at 2.9% last month, and we came in at 3.1. The month before was expected at 3.2. We came in at 3.4, and yet the stock market still rallied. Now, why did the stock market still rally? Because of a couple of things. This came with the expectation, because of the Fed, that the rate hiking cycle was done, right? And not only that, but corporate earnings happened at the same time, and at least for the Mag 7, earnings were not that bad. Some earnings, actually, of the Mag 7, most of them beat. It was the guidance that, for those that report guidance, that was kind of iffy. Nonetheless, the market kept on roaring, even though twice now we've come in hotter than expected. And right now, we are expecting 3.1%, and let's see if it comes in hotter. Kenan, what's going on, bro? What place haven't you visited but you love to go? I'll tell you in a minute.
A CPI number that will show us the latest read on inflation. It's something the markets and the Fed are watching closely. Ahead of that, you're looking at the futures indicated slightly higher. Dow futures up by about 6 points. S&P futures.
Someone asked me what my prediction is. I think that within the next week, I think we come down here. into this fair value gap, into this daily volume imbalance. That's what I think happens. I should probably connect my account. Okay.
.3 in January, and we had 2.2s in November and December. So this is now a firming issue as we've had back-to-back reads. We had up 0.4. Now ex-food and energy also up 0.4, 1/10 hotter. So we have back-to-back on headline and core up 0.4%. Now 0.4 equals the look we had last month on core. And the most recent lower number was October. That was up 0.2. That happened to have been the lowest since Feb of 21. So we're firming here. Now, the year-over-year numbers also hotter than expected. 3.2 on headline year-over-year. That's 3.2. That will be the highest since Dece when it was 3.4. January remains at 3.1. If we look at year-over-year core, 3.8. Now, this is interesting. This is 1/10 hotter than we were expecting, but it's cooler than the rear view mirror because we had back-to-back 3.9s, which were the lowest since May of 21, which was 3.8, which equals our current read. They find a lower read on core year over year. You're going back to April of 21 when it was 3.0. It should come as no surprise that interest rates shot up in 10-year up to 4.13. They're hovering around 4.11. Pre-opening equities at Dow Futures was really volatile right before the number came out. I saw up 2, up 4, -8, -9. Right now, though, you see it's -60 and counting. Now, that doesn't mean these numbers are going to stick. But when it comes to the interest rate side, I would say that as you look at the 2-year note, which was around 4.54, has moved up to 4.55. It certainly seems, though, the long end, which moved up from 4.08 to 4.11, 4.12, you want to pay close attention to the long end, especially after we're talking about budgets and deficits. The short end is going to be more about what's going on with the Fed. And before this number, we had the following setup. We had about 60 to 62% of a June cut, June 12th cut, and about 100% fully baked in for July 31st cut. And I'm sure those numbers are on the move. Becky, back to you.
All right, Rick, stay right there. We've got a lot more to talk about. And joining us right now with reaction to this new inflation data, we have Peter Earle, American Institute for Economic Research, senior economist, Skanda Amarnath, who is Employ America Executive Director, and our very own senior economics reporter, Steve Leisman. Steve, let's get to you first. I want you to dig down on the details, but first tell me, second month in a row that you're seeing higher core than expected. Is that a big problem? Does that change the narrative here? The dollar's going to go up
because rates go up.
It's a problem. I think Rick used the word sticky, and he had another word for it. It's not coming down at the pace it was. It is lower. Worth pointing out the 3.8 is lower than the 3.9, but not coming down as much as had been expected. 3.9 was 2 months ago. 3.8 was 3.7 was last month, so it did tick up a little bit. But here's the thing: I got a goose egg on food. I have owner's equivalent rent did come down. That's an important number, down to 0.4 from 0.6. Airlines shot up 3.6. Used cars down 1.8. New cars up 0.4%. That's what I was able to see here right now in terms of what the details were. So yeah, the Fed's going to look at this and say, you know what, our idea of being patient here. I think there's also a question, and I was sort of on board with this idea as to the extent to which January was an anomaly. Not sure it was anymore. Maybe there is a certain plateauing now of the CPI numbers, and the Fed either has to stay where it is right now, at least for a little while longer, in order to break the back of it and get it down more towards the 2% area. I'll leave it there.
Okay. Peter, why don't you weigh in on this? What do you take away after getting numbers that are a little hotter and inflation not slowing the way people had hoped or expected?
Yeah, I expected the February CPI, especially core, to be hotter month over month. You know, we still have some seasonal effects. Gasoline is up. It's interesting to see that food prices hadn't changed because I figured they would be up a little bit too. You know, I think what we need to see is what happens in super core, and specifically.
So for those that didn't catch it, core CPI is up month over month, hotter, more than expected by 0.1%. Year over year, it came in hotter. It was supposed to come in at 3.1, came in at 3.2. So both are hotter, both core and CPI year over year came in hotter. Core CPI, okay, so core CPI and headline CPI year over year came in hotter. Core month over month came in as expected. Someone said markets don't care, market only goes up. Someone tell this guy that the initial reaction is not the only reaction. I expect to take out London high here. This right here is London high. So I expect to take out London high, and then from there, we grab that liquidity and see what happens. But obviously, this news candle is meant to take out both stops, right? But the initial reaction is not the lasting reaction, right? Like we've seen this on CPI many times where the market will tank and then rally later in the day, or rally and then tank later in the day. But we have interest rates pushing up, thank God, because I closed out my long on the 10-year. I will re-enter that. I still think this is an amazing long-term setup here on the 10-year, bouncing off of 2013 levels. Made about $1,100 per contract on that. We'll likely re-enter that. But I'm going to wait until today normalizes and see if we get a rise in interest rates and a drop in interest rate futures. But this right here is a liquidity that I was waiting for. This to me looks like a power of 3. Right? This is on the S&P 500. We have consolidation, manipulation, and I'm expecting an expansion leg at some point. Just waiting for this news to fully digest. Obviously, markets are not open. The markets will open in about 45 minutes, 50 minutes or so, in which case you'll have a swath of volume coming in as well. But this is the type of liquidity and manipulation that I'm looking for, right? NQ taking out London high. Yeah, both NQ and ES. I bet we get a nice dip on TLT. Yeah, thoughts on REITs. Thoughts and prayers, Nick. Market is like Jerome. You take too long. You don't know what you're doing. The reality is people are not able to afford food. Debt is crazy, and central bank want to create debt. All right, not sure what to say to that. Forecasts are higher, came in higher, blah, blah, blah. What happens to the dollar? Yeah, we already said dollar is going to go up. Let me hear just a little bit more of what Rick says.
Treasury rates thinking, wow, they haven't moved that much. You actually have pre-opening Dow futures hovering around up 80 points. So they're definitely looking at this and thinking the Fed's going to see this data and they're going to maybe stay higher for longer, but they're still going to ease. And that really is the issue. So they bring rates down. Let's say they bring rates down to 3.5 or 3 3/4 or maybe 4%. If inflation looks like it wants to hover out around 3%, they could always hold it there or slightly higher for longer. And I think that's what the market's looking at. Now, if you look at two things that we normally don't talk about, but I bring it up now every month. If you look at the non-seasonally adjusted CPI index itself, which goes back to the beginning, or the seasonally adjusted core index, which goes back to the beginning, both those indexes today are at new all-time highs. They are almost every month. So your middle class looks at that, and the inflation compared to 2017, 2018, 2019 is significantly higher. The rate of change is what the Fed's looking at, and even the rate of change still, no matter how you slice it, does not look like 2%.
Hey, Steve, you said something earlier this morning that I've been thinking a lot about, just the idea that if the numbers don't start to match what the Fed is thinking they should be when it's looking at owner's equivalent rent, some of the housing inflation that's there, they might kind of look at other numbers instead and take that one out of the picture. That we keep talking about patience from the Fed, and that says the opposite to me. That says that No, they're looking to cut rates, and they're going to find a way to do that.
Yeah, I think you can look at it that way, but you can also look at it this way, Becky. You don't make a suicide pact with bad data, right? I mean, you don't say that I'm going to religiously follow this data no matter what, even while I have other good data that says, this should not be happening. It did come down this time, so the Fed doesn't have to make that choice. You do hear them saying, look, they have acknowledged that the Zillow data.
All right, 1 second, guys. Sorry. Steve is pissed. Do you think NVIDIA is still getting to all-time high? As opposed to what? I mean, NVIDIA was at all-time highs. You mean a new all-time high? Yeah, I think that'll happen. What do you think of Dixie? No idea what that means. What do you mean, what do I think of it? Can you briefly explain your treasury play? Yes, I'm going to go over the technicals of that. 1 second. I'm just trying to get somewhere. Hold on. Give me 1 second, guys. Tesla puts. I think that if you were going to do that, you probably should have done that yesterday, but 1 second. What is wrong with my shit? Am I? Um, 1 second. I'm just restarting something on my desktop. All right. So I'm waiting for when the market opens. This is what I'm waiting for on the indices. This right here looks like a power 3 to me. I'm waiting for a drop below London low, hopefully a retracement to take it lower. That's the only play that currently I'm waiting on right now. So we'll see. In terms of my treasury play, this is the reason that I was looking at that. I want to set an alert here, actually. Hold on, so I don't miss it. So I'm going to set an alert in case we drop lower. Because what I'm looking for is as it gets closer to market open, I'm looking for a drop here and hopefully a retest, right? I don't want just a flush through, but I personally think that we will likely power of 3 this. Got that long in NQ after it took out SSL. You mean you trading the news? I mean, that's awesome. But I typically don't trade news candles because both stops are getting obliterated usually, right? You're going to have to hold down through. You're going to have to hold through quite a bit of drawdown. Guys, also, I just want to say that we started a small account challenge on the Discord. So a small account futures, not one of these like, turning $100 into 100,000. All we are trading is high risk to reward, A+ trade setups. Really trying to support people who are trading prop or who are trading futures with a small account, showing you that compounding is definitely possible. So even I'm posting my stats here, right? And we started this yesterday in order to try to influence people to better trading habits and less gambling, yes, less YOLOing, showing people that you can actually trade futures with a small account and make a nice chunk of change while you're at it, right? Remember that all you need is a $500 trade per day, and you are making more than most people in terms of annual salary, right? $500 a day is $125,000 a year, which is crazy. So that is the ultimate goal for most people, right? Is financial freedom. So we started this challenge yesterday. And if you want to partake, you can join 7 days free and you can cancel anytime. Check the pinned comment on YouTube. You'll see the link there. The pinned chat on YouTube. If you want to come and check out what we are doing in there. I'm funded on a 100K account with TopStat. $500 is easy as hell. I think it's easy when you are definitely a seasoned trader and you have your psychology locked in. It's not the strategy portion of it is easy. The strategy part is easy. It's the psychology where most people mess up, right? Because they cannot stop themselves from revenge trading if they take a bad trade, for instance. Oh, I did not realize we had a 1 hour fair value gap here. Okay, I might wait to trade into that. What is the starting balance? Whatever anyone's balance is. It's not a starting balance. Some people have a 50K funded account. Some people are trading with a 100K funded account. Some people are trading with a $5,000 Trade Evade account. It's not about all having the same starting balance. You can have $1 million and still participate. You can have $2,000 and still participate. You can have a funded account that you bought for $49 through TopStep and still participate. The point is not to all have the same starting balance. That's just ridiculous. The point is to show that regardless of what your starting balance is, you can trade futures responsibly and compound your wins to actually be a profitable trader, as opposed to just throwing your money on options and praying that your options hit. Futures are all about waiting and catching wicks. No, it's definitely not that. It's literally the pinned comment, Monica, in the chat that you're typing. Click the top comment, the one in blue. I think we're going to trade up into this 1 hour fair value gap here. This is on the S&P 500. NQ, that 1 hour fair value gap is very far away, but we could still trade up into it. Even though we just took out buy-side liquidity from Friday's equal highs, it's not a necessity, right? So what I'm looking for now is, does the market want to, is this the draw on liquidity? And then does the market fall below London? Or do we want to trade up into this 1 hour fair value gap first? It's all about trying to figure out where your draw is. Now, most days you don't have so many draws up above on the high time frames, right? But in this case, you have London high, which was easily breached. You have these equal highs here from Friday, which were now just breached. So now the question becomes, is that your draw on liquidity or this huge fair value gap that's unfilled that was left from Friday's price action, right? Any thoughts on gold? What type of thoughts are you looking for, bro? high. And you have a breaker here too, by the way. You have a breaker here too. This right here is a breaker. Man, this is going to be interesting. This is going to be interesting, guys. So this is the breaker. All right. I wonder if I'm just waiting to see what the drawn liquidity is. The initial move up is likely due to the fact that services was less than expected. Yeah, but I mean, you could justify anything, right? Just the CPI can come in hotter than expected, the market can rally, and come in as expected, the market can tank. It's really just a series of taking liquidities, man. Like the story has to match up with the technicals. It's not just news based. I still think this is a manipulation leg up, and I think we're going to, as the market opens, we will likely trend down. Is the breaker the same as an order block? It is a kind of order block. It's not the same as an order block. A breaker is a kind of order block, but not every order block is a breaker. Forecasts were higher across the board, except for core month over month. Came in as expected. All right, I'm going to wait for this to happen. I'm going to explain my my 10-year trade. What I was saying was, if you look at the 10-year, these are 10-year futures. Here's the 2012 low, and here's the 2013 low, this yellow line. If you drag it all the way, we took liquidity below it, popped above, and now have retested it as support. And so on the weekly, you also have a weekly fair value gap here. So I longed the 10-year futures from here. And from this line to where it's at now was about $1,100 per contract. But if the interest rates go up, this moves inverse. So if interest rates rally, this will drop. But I think that in the long term, as the Fed starts cutting and whatnot, this is going to go up. So I'm looking for a re-entry back into this. Did we roll into June? Yes, we are in June. What a joke. Fraud market, Adolfo says. Well, that is usually the reaction of someone who, unfortunately, doesn't do any buying. Okay. What did I tell you? What did I tell you? So we just crossed below London high. Like I said, I expect as we get nearer to market open, we will see a drop move. Hopefully it gives us a retracement for an entry and not just tanks. Let's try this. This is kind of risky taking it before market open. I would rather wait for the market to open to take a big position. So I'm going to take a slightly small position here with 2 contracts. And if it doesn't work out, I'm going to wait until market open. Because I think we could potentially retest this yellow line up here. But let's see. What is NQ doing? Oh, NQ has a very similar setup here. I wonder if we get a rejection here. Let me see what's up higher on NQ. Okay. Currently up 160. I'm not going to move my stop to break even just yet. I'm just going to leave it as is for now. If we can flush below this, then we're in good shape. Then I'll move it to break even if we can flush below this. Up to 60. Let's see. I keep looking to see if NQ gives us a clue. NQ rejected off London high. If we can get below these levels, then we are golden. This is kind of risky before market open, so let's see. Up 340. There we go. Almost 400 now. We just need to get below this, and I'll move it to break even. Yeah, NQ is doing it. I probably could have taken an NQ too. All right, we need to reject here. Again, a little risky before market open, but let's see. I'm going to move my stop to here. Not a break even yet. Give us a flush. 412. Up 440, 460. Let's go. I really want to break below this, which is 5203.50. It is being stubborn. And that's because the market isn't open yet. Oh, up 500, guys. Up 500. This is a very stubborn level here. If we break below it, I think it will flush big time. Let me just make sure we're not roadblocked by anything. Oh, 560. Let's go. Now I'm going to move it to break even. Free trade here. Up 500 free trade. If we can flush this, let's go, baby. $700. Fuck. Let's go. I'm telling you guys, this is what we do every single day. I think we can get to at least 5,200 here. I might be out here and then go back for a second round. Let's go. Let's go. Give me $1,000 before breakfast. Come on, let's go. I'll explain the trade in a second, guys. Is NQ fleshing? Oh yeah. NQ's fleshing, ES should flush. Trade could have been taken in either or, guys. Trade could have been taken in either or. There is likely an order block to the left of us that is giving us a little bit of resistance here. So I might flatten this for about $800, which is crazy for a few minutes. But I'm telling you, we do this every single day. For those in the Discord, you can tell the people in the chat, we do this every single day. These are the types of trades we take. Way before breakfast? Yeah, it's 6 a.m. here. Man, if I can be done with my trading day and not even have to trade no more. Yeah, we are being stymied here by something. I'm going to close it out and re-enter. I want to take my profit. I'm not letting the shit go red. Fuck that. Because I think there's a chance if we come back up here to retest this order block near London High. Where do you see that order block? It's just based on behavior. So, you know, I know how the market behaves. And yeah, if you look to the left of here, you'll see this whole consolidation level is one big order block. So this is likely where we're being railroaded here. But took my gains, and I think we will drop further. I just don't know how much we'll retrace upwards before that. I think we could potentially, low likelihood, but we could potentially, not low likelihood. It is like a 50-50 probability for me that we could retest London High. I'm okay with this until the market opens, honestly. That's just, you know, easy play, guys. So I'll explain the trade right now. We had consolidation, manipulation, right? And so for those of you that were crying about, why is the market rallying on bad CPI? That's just the initial reaction. Once you're able to read this stuff, it's easy to see that this is a manipulative move, because a power of 3 is literally just this. You have consolidation. This is a very typical market pattern when we're talking about liquidity. Manipulation and then expansion. And it also happens the other way. So yes, you can have consolidation, manipulation to the downside, and then expansion to the upside. But in this case, this power 3 was clear that, we had bad data. We manipulated up, and now it's up to us to find where that draw on liquidity is. And that draw on liquidity, if you go to the 1 hour, there are a couple of draws. London high obviously was breached, but we have these equal highs here, and that was breached. Now we also have this breaker, right, formed by these candles here. There is a 1 hour fair value gap up here, but I didn't think it was so far away that I thought that was less likely to be our draw. So how did I get confirmation that this was the draw? Is because we fell below that and then fell below London. And once we fell below London, I took this right here, one of my favorite setups. I took the retracement into London and into the fair value gap, right? So we had an inverted fair value gap right here. We had a fair value gap and we had London high. So we retested that level, and that's where I took it short. So that's the explanation of the play. You guys see me call this stuff every time I live stream in real time. I don't know why we don't have 100,000 people watching this. Everyone would be richer. But yeah, NQ taking a dump, profit is profit. Yeah, I mean, for me, the market hasn't even opened yet. So I do think we will go lower. I think the market will likely turn red today. So again, for those of you crying that the market was green, and I don't know why you'd be mad if the market's green. I personally want the market to keep going up, but it is what it is. And I think that we will, on the high time frame, we are going to dig into these relative equal lows and this fair value gap here over the coming days. This is my target for ES and NQ, by the way. It has the same setup. I think that we come down here. Yeah, I don't use volume bars. Why would I watch volume? Who do you know makes it grand with such little risk? Yeah, exactly. Super small risk for sure. That's the name of the game, right? Have to preserve capital in order to. You have to preserve capital first, and if you do lose, you got to make sure your losses are small. That's for sure. I think we can reject here some more. I think we can reject here some more. Let's see. I don't know if I like this trade as I definitely don't like this trade as much as the first one. I'm looking to see where there's a continuation here. Because we clearly bounced off this fair value gap here. Now it's a matter of finding where's the imbalance here before continuing. Because I do think we get at least below the manipulation leg. I mean, below the consolidation leg. I would hate if we made it all the way up there. All right, I'm not going to take another trade here. Not just yet. Not just yet. Let's see how some of the indices are doing. I'm up 1.1K now. I'm cutting here, done for the day. No more over trading. Cool, man. That's awesome. It will raise up. I don't know why you think that. If you're talking about retracing, yes, but I think that my power of 3 thesis is going to play out. And I think over the coming days, we're going to trade into this down here. But yeah, hopefully you guys made some money on that. Hopefully you guys made some money on that. Do you know any finance influencers who used to be quants? No. Z, can't meet margin requirements for ES on toss? Guys, no. Okay, Ricardo. And to anybody who has a question about trading with a small account, okay? There are 2 options for you. That you are not shit out of luck when it comes to futures, okay? Do not trade options because you feel like you don't have, no pun intended, options. You do have options, okay? here are your options. You can go with a futures only platform like Tradeovate. Tradeovate offers the lowest intraday margins for any platform, whereas on Thinkorswim, you would require $13,000 to trade one contract, right, for S&P 500, and almost $20,000 to trade one contract for NASDAQ. If you're day trading, meaning you are opening and closing your position in the same day, the intraday margin on Tradeovate is $500 for S&P, $1,000 for NASDAQ. So that's your first option. Your second option is to do a funded account. You have no more excuses, right? It's to do a funded account. I personally use Top Step. Okay, that's what for those that were asking me what I was trading on now. I personally use Top Step. Let me get you a coupon code. If you click on this link, you can get a funded account for $49. Cooks, chill, bro. Chill. This is a game changer, okay? $49. If you use that link that I just sent out, you can get a 50K account. So what this means is if you pass the challenge, right, you can obviously go for higher, but if you are not experienced with futures, do not go for 100 or 150K. Stay on the 50K account. It's more than enough for you. You could trade 5 futures contracts, okay? So 50K, if you use that link, $49 a month, you pass the challenge. Once you pass the challenge, you are now awarded a 50K account, okay? And you could trade this up until kingdom come if you're good. You could trade it up unlimited. The first $10,000 is yours if you make $10,000. After that, you're splitting it 90-10 with Top Step. 90% for you, 10% for them. Okay? So you do have options. Don't just say, I'm going to trade SPX or SPY or QQQ because I don't have money to trade futures. No, you do. Only $49 on Top Step, or fund like a $5,000 account of your real money on Tradeovate, where one ES contract is 500, one NQ contract is 1,000, versus what it would be on Thinkorswim. Okay? No more of this. I can't do it. I don't have the capital. You do have the capital. Everyone can afford this, and everyone who's serious about trading should either go the funded route or a futures only platform like Tradeovate. But yes, I agree with you. If you try to trade on Thinkorswim, it is a shit ton of collateral. But this right here is a game changer. So hopefully that makes sense, bro. And if you have any questions, ask me right now. If you have any questions about how funded accounts work or whatever, let me know right now. And for Cooks that said NQ's ripping up, I don't know what you're watching, bro. You must be on the seconds chart. It's just consolidating here. I expected to come here and see this here, but I should have known. You'd be hyperbolic. So, Ricardo, hopefully that helps, bro. And you wouldn't be able to take the trades that I just took with with options, right? Not that early. Like now you can trade options, but not as early as I took those trades. All right. So once the market opens, I do anticipate another manipulation spike. I am comfortable sitting on profits right now. I might take something in my personal account. I don't want to touch my prop account just yet. I want to wait for another A+ trade. We'll definitely be sending it out in the Discord as well as the other two analysts. Obviously they send out their trades too. I want to see if London high is going to get rejected again, or can we trade all the way to this 5-minute fair value gap that's at OTE. Okay? This is what I want to see. For a really optimal trade would be us trading up in here. The probability of getting there is a little lower because we'd have to surpass London high again. Cooks, you were insufferable, bro. The probability of getting up here is a little less. I think it's still plausible, but we have to cross London high to get there. But we have a 5-minute fair value gap here at OTE. This would be an optimal trade here. So if we can trade up into here, I would likely take something like this. This is your 2-to-1. This is almost 4-to-1 here. It's less likely because we need a push above London high. But I don't see any major imbalances here. Oh, actually, you know what? Scratch this. Hold on, let me see something. We do have a 5-minute inversion gap here at London high. Okay, so this for me would not be an A+ trade because we have the 5-minute right above with OTE, but would be worth a stab. Yes, Roger, you're correct. So in terms of how you are taxed as a 1099 contractor. Correct. So the payouts that you get from Top Step, you are taxed as a 1099 contractor. So if you have the money, in my view, if you have a good amount of capital, you should be trading a futures only platform like Tradeovate. If you are starting out and you haven't traded futures yet, or you have capital constrictions, then you should probably trade a funded account. Have a good day, bro. See you, Cooks. Do you do call-outs on Discord or just levels? Yes, we have exact trades on the Discord. But if all you are paying for is an alert service, you are cheating yourself. Okay? If you are not experienced, I mean, if you don't put in the time to learn and you're just trying to copy someone's trades, one, there's still a high chance that you will fail because you are not fast enough to put in stop limits and trailing stops and moving stops to break even and TPs and all that stuff, right? And two, you are just relying on someone else's brain without or even ideas. I want to see if this trade works out here. Back to London high. If we get up here, I'll likely take another trade in my prop. But I want to, if we reject from here, that will be sweet. Let's see. Because, guys, this level is not a frivolous level. This is London. And an inverted fair value gap. Market just opened, guys. Yep, no hand holding. No, we do a lot of hand holding, to be honest. I mean, we have a beginner section. People can ask questions freely. We do a ton of hand holding, bro. I'm just saying that if all you're looking for is, can I copy trades? Can I copy trades? You're not going to be a better trader. You're not going to learn how to do this stuff. You're not going to learn how to fish properly. We still haven't closed below the manipulation leg, by the way. I mean, the consolidation leg. I'm gonna look at the I'm gonna look at equities in a bit. I think we can get to 51.97 here. Look, I'm up on this trade, already up 412. So I took it in my personal account. Let's go. That's a 2-to-1 right there. I'm going to move my stop to break even. I think we can get down here. Flush. There it is. Up 500, guys. This is the second account. Already pulled in well over 1,000 for the day. Easy work. Few seconds after a trade is entered. Ain't nobody doing it like this, bro. Come on. You can pay someone to tell you to throw your hard-earned money at stupid options. Come on, guys. Ain't nobody doing it like this. We're going to get 700 on this play, huh? 625. Let's go. 712. 725. Can we turn red? Can we turn red, ES? Can we please turn red, S&P? Can we please turn red, S&P? Let's go. 0.16 For those of you crying about the market being up or rallying or why is it rocketing, don't worry, bro. I got you. Let it turn red, baby. Let it turn red. All you need is one contract. People want to YOLO and shit. 975. 0.1. Come on. We're 0.1 away from turning red. I'll explain this trade in a second, too. Easy work, guys. Easy work. Where did Cooks go? I don't know, bro. Cooks ran away. Cooks ran away. Let's go. We hit the 1,000 mark, baby. .07 away. Oh, Cooks is still here. All right. What's up, Cooks? The market is ripping, bro. All right, Cooks, you got it, bro. I don't know why you're still here. You said you were leaving. All right. Bagged and tagged. $2,000 plays, bro. Just a few minutes in each trade. Cooks, no shade, bro. Make your money, bro. No need to be mad. You say you were leaving, though, but you're sticking around. Glad to have you. Yeah, if you're in a trade, this is more than enough, guys. Don't get greedy. Don't get greedy. We'll find another opportunity. All right. Second explanation for this trade. I mean, this was already a 7-1 trade. Seven to 1 trade, guys. So here, 0.02, mark is going to turn red. Who told you mark's going to turn red? Who else? Who else, when the market is ripping, can tell you the market is going to turn red? That's what I want to know. That's what I want to know. Who else has the guts to call that out, bro? And 0.02 points away. No, give me glory. All right, I'll explain the trade. So, see this? London, right? One of my favorite setups is a retest of a major liquidity level, just like we played up here from the first short, is a retest of a major liquidity level combined with a with a fair value gap, right? So in this case, I saw a fair value gap here at OTE, which is optimal trade entry, which is, just think of it like the golden pocket, right? Up here. So I thought there was a possibility of getting up here, but in order to get up here, we have to surpass London high, right? We have to surpass London high, which if we already displaced below London high is really a tough proposition to displace back above London high. So when I was looking at this, and you guys saw it in real time, when I was looking at this, I said, there has to be there has to be something else here besides coming all the way back up here, which would be unlikely but plausible. And I saw that there was an inverted fair value gap right here. Now, inverted fair value gap is basically just, it's a fair value gap that was ignored on the way down, or vice versa on the way up, right? So in this case, you saw how we trickled down in price. We trickled down in price and completely ignored this fair value gap. So we ignored the fair value gap. And now once we start trading up into it, if it is paired with a major liquidity level, in this case, London, that becomes a very strong rejection point. So I took the short from here. My stop limit was just right there. Again, someone said earlier, making $1,000 with a very tight stop. It's true, while risking very little. I only risked 3 points here. That's $150 on ES, right? And all I took was one contract, guys. So don't think that you need to YOLO 3-5 contracts. And my first exit was going to be here at these equal lows, but it actually just shot down and kept displacing. And so I stayed with it, right? And again, my thesis is that the S&P and the NASDAQ turn red today. That's my thesis. Whether they stay red depends on what they do at lower liquidity levels. But we started displacing down really quickly, so there was no reason for me to exit here. And I would have gotten 3-1, almost 4-1 at the equal lows. Ended up getting 7-1 and exiting here. So hopefully that explains things. Now, we go over literally all of this, and we have another mastermind session tomorrow. We do 8 sessions, 4 weeks, where we go over how to set up your chart for this kind of TA. There are 0 indicators on my chart, guys. There are no indicators here. You see that for yourself. I literally just trade price action. Someone asked me earlier about volume. I don't look at volume, right? Market just turned red. Who told you? Who told you market would turn red when it was up almost 0.75% when I said that? So we go over this every single month in our mastermind, right? Now you have to apply to be on the mastermind. You will see that application in the description below. If you're on YouTube, you'll see the application there. But if you are accepted, then you get to go through the mastermind program where I literally teach the classes. It's not recorded. It's me teaching it live. 8 sessions going over technical analysis, trading, how to find A+ trade setups, how to find these fair value gaps, how to draw London high, London low, Asia high, Asia low, how to find liquidity levels, how to draw your fibs properly, how to set up risk to reward, etc. That drop was predictable today? Okay. Well, a lot of people were screaming about why the market is up. I told you the market would turn red. Market is well red. Damn, Cooks, man. What is wrong, bro? This dude got his panties in a bunch. Tesla's going to 152, guys. I already said that. Tesla's going to 152 right here. after it breaks down from these ascending channels, it tends to see a lot of violence. And the next major support, these equal lows here at 152. That is my target for Tesla. Gold correcting too. Yeah, because the dollar spiking. I was trying to see if there was a potential setup. Oh, you know what? I want to see something in gold because there is this insane trend line, guys, that has been in place since 2011 on gold futures. And I want to see if okay, so we didn't hit it yet. Now there is this other trend line. Man, gold is crazy how it respects these long-term trend lines. This trend line is from 2020. Yeah, I definitely want to find a short in gold. Wow, gold had a manipulative move too, guys. Look at this. Consolidation, manipulation, expansion. Where can I find your videos explaining what you do? On YouTube, but it's not going to be as detailed as the mastermind, right? Which is obviously 8 classes, 2 hours each. I want to short this, but gold just took a major liquidity level from Friday. I want to short the continuation on gold. But we just took a major... actually, there's equal lows here. Actually, gold is going to come down some more. Gold is going to take out these lows here. These equal lows. It'll likely reject off this and come down and take out these lows. I didn't say 50, bro. I said Tesla's going to 150, not 50. And the market is well read now. Which area in ES did you say that FVG was? Rewind it, bro. I went over the trades quite a bit. You'll be able to watch the stream again, but I think gold's going to get rejected here to take these out. I might take another trade here. Freaking Tesla, man. Piece of shit. Let's see if I can get a 2-to-1 here. Let me mark up the trade real quick, guys. This is not a 2-to-1, so I can't take it, even though I'm up a lot today. For 2-to-1, I would have to retrace all the way up here. Only 2-to-1, guys. You can't just take willy-nilly trades. So it would have to retrace all the way up here. And let's see what Dixie's doing. Oh yeah, Dixie's likely gonna come into this fair value gap and continue up, which means gold will do the opposite. I cannot take a trade from I think we're gonna come in here and reject, but I cannot take a trade that is less than where I have my entry here, because my risk to reward, if I'm targeting these lows, my risk to reward will be less than 2 to 1, and I have to stick to my principles in order to remain profitable. So if we get here, awesome. If not, oh well. I'm going to wait for that and see what happens. All right. Watch extreme greed goes extreme fear. Yeah, I mean, that's usually how it happens, right? For those of you asking me why I think Tesla's going to 150, yeah. Here's my TA is pretty simple, guys. Tesla likes to create these ascending channels, right? And it likes to create these ascending wedges. Now, a lot of times Tesla does continue to trade up, but the times that it breaks, you see a violent downtrend. And in this case, we broke it violently. And it's not a help that Tesla did not rally with the market. So now if the market wants to pull back a bit, which I think it will, then we are going to likely hit the next support level, which is this 152 here from April 2023. Hopefully that makes sense. Do you guys want me to keep on the stream and keep finding trades? What? All of that with thousands of people joining, we only have 300 likes? Oh, I'm not giving no more trades, man. No more trades. No more trades till we get this to 500 likes. How is it that we only have 300 likes? And I'm making you guys rich. Abba says, can I paper trade futures in Top Step? Yes, you can. You could definitely paper trade futures in Top Step. They have what's called a practice account. So that's a very good question, Abba. If you are not ready yet to take your challenge, which props to you if you know yourself. If you are not ready yet to take a challenge, then you can't. Bro, what is up with all these kissy faces, dude? I feel like I'm texting with my 3-year-old niece. She just keeps sending emojis. Let me hide the spammer here. Abba, sorry. Apologies for that distraction there. There's just like a million emojis there. Yes, if you're not ready yet to trade your evaluation account, then you can trade what's called a practice account before you take an evaluation. So yes, good question. Great question. We be forgetting to hit the like button. I got you, and thanks for making me money this morning. Appreciate you. Can I trade futures with a small account on plus 500? I don't know. I don't know what plus 500 is. That a UK platform? I don't know. I would say go to a funded platform. There are tons of funded platforms that you can trade from the UK. Top Step is one of them. Top Step. You can go to the help center here, and it shows you it shows you what countries you can trade in. So if it's on this list, you cannot trade from there. Which some of these are pretty weird. Like, some of these make sense, but some of these are pretty weird. You know, like Cuba, North Korea, maybe makes sense. Somalia. But why couldn't you do it from Cote d'Ivoire or Jamaica? You know what I mean? I could see how a religious country like Iran could maybe perceive it as gambling, so fair. But some of these don't make sense. As long as it's not on this list, then yes, you can trade from there. And then obviously Canada. If you're Canadian, it says, in short, yes, we do offer prop trading for Canadian residents. Many U.S. brokerage firms do not open Canadian accounts due to regulatory concerns. However, as a prop trader, you would be trading on a sub-account of a master account. Therefore, it would be considered a U.S.-based account. You could sign up for trading. Oh, I guess in Canada you can. But there might be some, I don't know, some complications. Canada's crazy, man. Sometimes the restrictions that Canadians tell me about, I'm just like, wow, that's insane. But yes, you can trade. If you're from the UK, you can trade on Top Step. All right, let's see where else, where the market is going though, because I bet you. Oh, we definitely have a breaker here. That would be so crazy if it comes back up to this fair value gap. But we are already done with trades. No, London level is not invalidated. It is still it is the high that it made during London. So it's still a thing. I bet you we get to here. Oh man, I might take another trade here. What did gold do? Did gold not come up to my level? Not yet. This would be so crazy if we get up here. After grabbing all this liquidity down here, it would be so crazy if we get up here. Yeah, this market is definitely wild for sure. Buying Cardano now is like buying Microsoft in the 90s. And then you have someone saying that. I mean, how do you reason with that? Buying Cardano now is like buying Microsoft in the 90s? Yeah, okay. Microsoft, the $3 trillion company. That's what Cardano is going to be, exactly. Bro, whoever you're listening to on the crypto side, turn that off. What are your expectations on Euro USD? I don't trade Forex, man. Fuck. Oh, no. I'm going to have to cancel my order. See, I couldn't take it. Except for at this level to make it a 2-to-1. But like I said, it's going to take out these lows. Guys, I'm going to get some more coffee. 1 second, okay? I'll be right back. This is going to go to lows. Watch. I'm going to go get coffee and it'll be down here. 1 second. Let me leave you with some entertainment.
In the past couple months in the Fed's battle against inflation. Here are the numbers. Up 0.4 on the headline. That was in line with expectations. That is up a tick from January with higher energy prices. Headline year over year does tick up to 3.2%. The core, a tenth hotter than expectations, actually 0.004. It was 0.36. It rounded up. And that was unchanged, but a tenth higher than expectations. Core year over year does decline because of base effects with prior numbers dropping out that were hotter. How do we get here? Food unchanged. Energy, there's the surge in gasoline prices on the month. New vehicles down a tick. Used car up 0.5, reversing a downward trend. And there's that pesky owner's equivalent rent did come down finally, down from 0.6 to 0.4% on the month. What happened to the Fed probabilities? Well, before the CPI, May was at 21, now 13. June was at 70, now it's down to 68%. Here's the question at next week's meeting for the Fed. Do Fed officials still project 3 cuts? So the median Fed official still project 3 cuts this year. Does this number change that? Meanwhile, the CNBC NRF retail monitor, powered by actual credit card spending data from Affinity Solutions, shows a rebound in consumer spending in February. Retail sales were...
What do you know? What do you know? All right, that's the third play I call out today. That's the third play I call out today. Coffee, taking a dump? No, bro. I literally, look. That's funny. but I literally went to go get coffee. One more trade? How many trades can I give you, bro? I gave you 2 shorts on ES. And this short on gold. I told you where gold's going. What ticker to use for gold? GC. Yeah, watch gold take out these lows here. I'll never stream again if it doesn't take out these lows. What do you know? What do you know? What do you know? All right, guys, I'm telling you. So that's 3 trades given to you on stream. 3 for 3. Appreciate you guys watching. And we do this every single day. I'm not one of these traders that doesn't attend to his Discord. I'm on there 24/7, including two other analysts that we have who are just as talented at futures trading. Obviously, I also do analysis on stocks, option selling, etc. It's not just futures trading, but futures trading is the way to really make capital appear out of nowhere, especially if you have limited funds and you're trading prop. So if you want to come get a taste of this every single day and not just once in a while in a live stream, come and join us. You'll see a coupon code in the description for $99 a month for life. Make sure you take advantage of that. If you want to apply for the mastermind, you will also see that mastermind application in the description below, where it's 8 classes, 4 weeks, going over exactly how to do TA on your charts, how it is that I call these levels and I tell you these lows will get taken out, and how ES is likely going to take out London high before tanking. Like, all this stuff, it's not magic, even though it might seem like it because of the consistency. So yeah, come join us. Come be a part of the mastermind if you wish, or just come be a part of the monthly. Would love to have you. We're going to be closing memberships at the end of the month once again. Hold it. No, don't hold any positions. We're out of all positions here. For those of you in the Discord, I will see you guys in a second. We'll trade with you guys again until New York lunch. So I'll see you guys on the Discord. 3 for 3 today. Happy to make some money for you guys. Appreciate you guys always watching. Thank you so much. Peace.